Good morning. Welcome to today's webinar presentation on ACA reporting in 2015, asking questions and gaining clarity. My name is Deborah Hyde, and I am a risk counsel here at Filice Insurance. So we'll really be covering a lot of ground this morning, starting with an ACA reporting overview. We'll take a look at which employers are subject to the reporting requirements, the relevant deadlines to complete the reporting, and then we'll look at the forms that will be used to file with the IRS. We'll then go over some clarifications provided by the IRS in the final 2015 instructions, including reporting offers of COBRA coverage and coverage under a multi-employer plan, extensions and waivers that may be available, and of course, filing penalties. We'll cover some strategies to successfully complete reporting, whether you're outsourcing a task or whether you're taking it on in-house. And finally, we will address as many outstanding questions as time permits. Hopefully, you all had the opportunity to submit some questions at the time of registration, and I will be addressing those at different points in the presentation this morning. But if you do have any questions that come up during the presentation, please feel free to submit those using the question and answer feature at the bottom of your screen. There are also a couple handouts that are provided for you this morning, and those can be found in that green folder icon at the bottom right of your screen. And so there are a couple handouts in there, including the IRS forms that you'll be using to do the filing. It's not necessary that you have those in front of you and printed out to go through the presentation this morning, but if you happen to have them, they should prove pretty helpful. Okay, so when we talk about employer reporting under the Affordable Care Act, we're really looking at three different requirements, and not all of these requirements will apply to every employer. So first, the very first reporting requirement is illustrated in yellow to the left there, and that's the aggregate value reporting done under Section 6051. Now, this is also the W-2 reporting that some of you as employers have been doing for the past couple of years. Now, currently, this W-2 reporting requirement applies only to employers who filed 250 or more Forms W-2 in the prior year. So if you did not file 250 or more Forms W-2 in the prior year, you are not currently subject to this requirement. Now, if you did file 250 or more W-2s the prior year, you are required to report on the employee's Form W-2 the aggregate or actual cost of medical coverage that you provided to the employee during the year, and that includes employee and employer contributions to the coverage. The other two reporting requirements in the blue and the pink, that's Section 6055 and Section 6056 reporting. These two reporting requirements are the ones that we are going to be focusing on this morning. So let's take a closer look at reporting under Section 6056. This is the reporting requirement that applies to applicable large employers, or ALEs. Now, generally, these are employers with 50 or more full-time and full-time equivalent employees in the previous year. So, if you employed in 2014 an average of 50 or more full-time and full-time equivalent employees, then you are considered an applicable large employer this year in 2015, and that means you are also subject to these reporting requirements. So in other words, these are the employers that are currently subject to the ACA's employer mandate. Now, importantly, this does include those mid-sized employers with between 50 and 99 full-time and full-time equivalent employees that may qualify for and may be taking advantage of that compliance transition relief that allows you to delay compliance with the employer mandate until 2016. If that's you, if you're a mid-sized employer and you're delaying compliance, you are nevertheless subject to these reporting requirements. So I cannot stress enough that all applicable large employers are subject to the reporting requirement in 2015. And that is regardless of whether or not the medical plan you maintain is fully insured. So that's fully insured medical plans and self-funded medical plans both. The other reporting requirement is under Section 6055, and this one applies to small employers that sponsor a self-funded medical plan. So generally, a small employer is going to be one that employed fewer than 50 full-time and full-time equivalent employees in the previous year. So in other words, these are the employers who are not subject to the ACA's employer mandate in 2015. But the small employer must maintain a medical plan that is self-funded. And a self-funded medical plan means that all of the claims incurred are paid by the employer, not through an insurance carrier. So if you are paying all of the claims, if you are funding the medical plan, and you don't have a carrier like a Kaiser or like an Anthem, then your plan is self-funded. So that's very rare. Small employers typically don't have a self-funded plan, but there are some out there. So if you're a small employer that sponsors a self-funded medical plan, you are subject to the ACA reporting requirements under Section 6055. So small employers that sponsor a fully insured medical plan are not subject to ACA reporting requirements. So if that's you, if you're a small employer and your medical plans are all fully insured, of course you're more than welcome to continue on with us this morning, but you'll probably be getting a lot more information than you would ever like to know. So that is completely up to you if you're a small employer with a fully insured medical plan. Okay, now that we know which employers are subject to the reporting requirements, what exactly are the relevant deadlines that we need to be keeping in mind? So there are a couple of different deadlines that are at play, and the first one, the earliest one, is the January 31st deadline. And this is the date by when employers must provide employees with an employee statement. And that's going to be a copy of either Form 1095B or 1095C no later than January 31st. This also happens to align with your W-2 distribution deadline. So going forward, it might be helpful to think about getting out your W-2s and getting out your employee statements under the ACA reporting at the same time, no later than January 31st. And for 2015 reporting, it just so happens that the January the 31st falls on a Sunday. So that means that the statements will actually be due by February 1st of 2016. The other two deadlines, we're looking at either a February 28th or a March 31st deadline. It's an either-or deadline. It won't be both. So first, February 28th, this is the date by when employers must file forms with the IRS. So your IRS submission date is going to be February 28th. And for 2015 reporting, the 28th happens to fall on a Sunday. So forms must be filed with the IRS by February 29th of 2016. Now, if you're going to file these forms electronically with the IRS, you have a different deadline, and that is a March 31st deadline. So all employers that are filing forms electronically with the IRS must file no later than March the 31st. And for 2015 reporting, that deadline is going to remain March 31st of 2016. So keep in mind that you're looking at a January 31st deadline and then either a February 28th or a March 31st deadline to get your IRS submissions in. With those deadlines in mind now, let's take a look at the forms themselves. And we're going to start with forms that will be filed by applicable large employers. And we're going to first take a look at Form 1095C. I know that this is not the greatest image here. It doesn't show the greatest detail, but you do, again, you have these forms provided to you as handouts, so please feel free to take a look at those as we go through these forms. So the Form 1095C, this is the form that you will be required to fill out for every single full-time employee that you employed during the year, so during 2015. So if you employed a total of 200 full-time employees during 2015, that means you will be filling out 200 Forms 1095-C. So you might end up filling out quite a few. You'll see that the first part, Part 1, this one's pretty simple and straightforward. You will just be providing employee identifying information there to the left. And again, this is for full-time employees only, so your employees who are working an average of 30 or more hours per week. And then to the right, you have applicable large employer information. So that's identifying information of you, the employer. Now, I really quickly want to comment that you do have to fill these out for every single full-time employee. If you happen to offer coverage to employees who are not full-time, so perhaps you're offering coverage to part-time employees as well, that's great, but you do not have to report on those part-time employees. You only want to report on the full-time employees that you employ. Okay, Part 2, there in the middle, this is where it gets a little bit tricky and it goes into greater detail. So there are 3 lines of data in Part 2, and they're all broken out by month. So really quickly, I can't go into the nitty-gritty details on this, but I do want to just quickly go over what those data points are. So on line 14, which is the first line in there, it prompts you to indicate what type of coverage or offer of coverage you made to the employee. So what you'll be doing on line 14 is, for every single month of the year, you will be using a specific code provided by the IRS to indicate whether or not you offered medical coverage to the employee that month, and if you did, what type of coverage was it? So again, you are going to be indicating for every single month of the year. You don't want to leave any month unrepresented. So you'll be using a code to indicate whether or not you made medical coverage available to that employee, and if you made it available, what type of coverage it was. On the line below that, line 15, you are prompted to enter the employee share of the lowest cost monthly premium for self-only minimum value coverage. What you're doing on line 15 is, for every single month where you made an offer of coverage to the employee, so where you made medical coverage available to the employee, you are going to indicate on line 15 the lowest cost medical plan that you made available. And we're looking only at the lowest cost medical plan for self-only coverage and what the employee would be paying for that coverage. So just as an example, perhaps you offer 3 different medical plans, and the lowest cost monthly premium is $200, and you as the employer contribute 50% of the cost, then that means that the employee share is $100 for the month. So you would enter $100 on line 15 for that month. Finally, the last line there, that's line 16, and this one is perhaps the trickiest one, and you are to enter the applicable Section 4980H Safe Harbor Code. So again, we're going to be using a set of codes that's provided by the IRS to indicate additional information to the IRS. So you will be indicating things such as whether or not the employee enrolled in the coverage you offered. You'll be indicating perhaps that the employee was not your employee for that month. Perhaps you'll be indicating that the employee was in a waiting period. So there are a number of different codes that you'll be selecting from to really describe to the IRS what was happening, what was going on that month, and why you did or didn't offer coverage that month to the employee. Finally, Part 3 on this form. Part 3 is to be filled out only by employers that offer a self-funded medical plan. So if you're an employer that sponsors a self-funded medical plan or plans, you will be responsible for completing Part 3. And on Part 3, you will simply be listing out the name of the employee and then perhaps any dependents or a spouse that are also on that employee's plan. And you'll be indicating there to the right the months that those individuals were actually enrolled in participating in your plan. So it's pretty simple, Part 3. It's just additional information. So if you're an employer with a fully insured medical plan, you will not be completing Part 3, which means you will not be reporting or supplying any information on dependents or spouses. So you will only be providing information on full-time employees on this Form 1095-C. The other form that large employers will be responsible for filling out and filing is Form 1094-C, and this is a little bit simpler compared to the 1095-C. You will only be filling this form out one time, and you will be filing it directly with the IRS. It's called the transmittal form. I like to think of it as the cover letter because it's going along with all those forms 1095-C to the IRS. This form is actually 3 pages long, so we only have the first page here as a preview. Again, the form is provided as a handout, so you should have access to all of those pages. But just to give you an idea, this form contains some really basic summary information about the year and about the coverage that you did or didn't offer to your full-time employees throughout the year. So it's very summary, it's very high level, and you're only filling it out one time. So compared to the 1095-C forms, it's a much simpler process and a much simpler task for you. Okay, let's now switch gears a little bit and talk about small employers. And small employers do have a bit of an easier time when it comes to these forms. So the first form we're going to look at that small employers will be responsible for completing, and again, this is only small employers with a self-funded medical plan, is Form 1095-B. And Form 1095-B will be filled out for every single employee you had in 2015 that was participating in your medical plan. So this form is not limited to just full-time employees. This will actually be filled out for every single participating employee in 2015. So let's just say you had 45 employees on your medical plan total throughout the year 2015. That means you will be filling out 45 Forms 1095-B. If you take a look there at Part 1, that's responsible individual information. That's the employee's information. Part 2 and 3, that's your information as the employer or as the provider of medical coverage. That's you. And then in Part 4, you are going to actually list the employee as well as any dependents and spouses on the plan. You're going to actually list out and indicate by checking those boxes to the right the months in which those individuals were actually covered under your medical plan. So again, this is a much simpler task, but you will be responsible for supplying information and data on those spouses and dependents. So it's not limited to just your employees. The other form that small employers will need to be responsible for is the Form 1094-B, and it really does not get any simpler than this. This is one page, so we're looking at the whole thing right now, and it's being filled out one time only, and it's going to go directly to the IRS. Again, it's a transmittal form, so it's like a cover letter. You're just going to take that 1094-B form, stick it with all your 1095-B forms, and submit it to the IRS. It literally just contains identifying information about you, the employer, as well as the total number of forms 1095-B that you're going to be submitting. So in the grand scheme of things, if we look at it, small employers really do have an easier time with these forms than large employers. Okay, moving on. The IRS released the final set of 2015 instructions over the summer, so not too long ago. And in those instructions, they clarified a few points that were previously a little bit unclear. And the first of those points that they clarified in the instructions was how to report an offer of COBRA coverage. So reporting an offer of COBRA coverage is different depending upon whether the employee is a terminated employee or whether they remain an active employee. And so for purposes of our discussion right now on COBRA coverage, we are talking about how it will be reported on Form 1095-C. So this is for large employer consideration only. So reporting an offer of COBRA coverage to a terminated employee, it's reported as no offer of coverage regardless of whether or not the former employee elects COBRA. So what you'll be doing is on that Form 1095-C on line 14, you will be using code 1H, no offer of coverage, to indicate that there was no offer of coverage made, that perhaps COBRA coverage was offered, but you're going to use that code 1H regardless of what the employee actually elects to do with that COBRA offer. Now, if you're making an offer of COBRA coverage to a still active employee, it will be reported differently. And so, offering COBRA coverage to a still active employee, it's rare. It doesn't happen a whole lot. But if you happen to have a full-time employee who perhaps transitions or switches to a part-time position mid-year, and so they lose their eligibility to participate in your medical plan, you will be offering them an offer of COBRA coverage, and you will report it slightly differently. So an offer of COBRA coverage made to an active employee is going to be reported in the same manner and using the same code as an offer of that type of coverage to other employees. And so that's kind of a mouthful and perhaps doesn't make a whole lot of sense on its face. But for example, if you have, while the employee was active, if you are reporting that coverage on line 14 as perhaps a 1E, minimum value coverage to the employee and an offer to spouse and dependents, you will continue to report as a 1E as opposed to using code 1H on line 14. So if you're making the offer to a still active employee, it's not considered no offer of coverage, it's considered the same offer of coverage. Now, keep in mind that when you fill out line 15, reflecting the cost of the coverage, the COBRA coverage will likely not end up being affordable to the employee, and that's because the employee will now be responsible for covering the full premium amount, and that's okay because we know that COBRA coverage does not have that affordability requirement attached to it. So don't get nervous or don't be alarmed at that high cost that you'll perhaps be reporting on line 15. Another point of clarification that was provided in 2015 instructions is reporting offers of coverage under a multi-employer plan. Again, this is going to be reflected on Form 1095-C, so we're really talking right now to those large employers. So employers must report on all full-time employees, including union employees. So you are responsible as an employer to report on your full-time union employees. Now, union employees, of course, are typically offered coverage through the union-sponsored plan. So you may not have access to certain information about that plan, like whether the employee actually enrolled in the plan, or how much it costs the employee, or what type of coverage it actually provides. And that's okay, because the IRS has provided a very specific way for you to report on these union employees. And so the way that you will do that is for months where you, the employer, contribute to that multi-employer union-sponsored plan on behalf of the union employee, you will enter code 1H on line 14, and I'm sorry, that should say line 14, not line 4. So you'll enter code 1H on line 14, regardless of whether or not the employee was enrolled or was even eligible to enroll in that multi-employer plan. Yes, code 1H represents no offer of coverage, but that is what the IRS tells you to enter on line 14. Now, you will enter on line 16, code 2E, and that will be entered to indicate that you, the employer, contributed to the multi-employer plan that month on behalf of the employee, and you can therefore treat that contribution as an offer of medical coverage under the multi-employer plan. So that concept might be a little bit confusing if this is the first time you've heard it, but what it comes down to is if you, the employer, are contributing to the plan, to the union-sponsored plan on behalf of the employee, then you get to treat that contribution as an offer of medical coverage, and you report it using that code 1H, code 2E combination. Now, for any month where you, the employer, did not contribute to the multi-employer plan on behalf of the union employee, that Code 2E, multi-employer relief, cannot be used. And that's pretty rare. So typically, union contracts and agreements do require employers to contribute to the union plan for any month that the employee is actually working and performing work for the employer. But if your contract happens to differ, you will want to take a look at the details and make sure that Code 2E relief is available. The IRS did provide some good news for employers in these 2015 instructions, and those came in the form of extensions for filing and waivers from the electronic filing requirement. So first, extensions for filing. Employers can apply for an automatic 30-day extension of the time to file forms with the IRS, and that is done by submitting Form 8809 no later than the due date for submission of the returns. And if you do that, no explanation is required. So there's an automatic 30-day extension you can get so long as you timely submit that Form 8809. Employers may also request an extension of time to provide statements to employees, but that is done differently. So if you want to get an extension of time to get those employee statements out, you have to send a separate written request to the IRS, and it's not necessarily automatic. So you're looking at two different requests that you have to get in if you want an extension on both of those deadlines. Also available is a waiver from the electronic filing requirement. So employers who are filing 250 or more returns with the IRS are actually required to file those forms electronically. If for whatever reason you do not want to or you are unable to file those forms electronically, you can submit a waiver from that requirement, but you will do that by using Form 8508, and you actually have to get that request in at least 45 days prior to the due date. So if you're wanting to waive that electronic filing requirement, you actually have to get that in well in advance of the due date. But I would actually recommend filing electronically, even if you're an employer with fewer than 250 forms. It tends to be simpler, but nevertheless, you do have this waiver option available to you. And then finally, let's talk about the potential penalties at play with these filing requirements. So the reporting penalties. A penalty for a failure to file a return with the IRS is going to be $250 per return. A penalty for failure to provide a correct employee statement is $250 per statement as well. But there are special rules that the IRS can apply that can increase those penalty amounts in cases where there is an intentional disregard of the requirements. Now, the good news, the silver lining in this, is that for the 2015 reporting year only, employers are actually provided some relief from reporting penalties. So for this first year of reporting, penalties will not be imposed for filing incorrect or incomplete information so long as the filer can demonstrate a good faith effort to comply. What that means is if you get your forms submitted to the IRS and provided to your employees on time, and you have done your absolute best to make sure that that information is reported correctly and accurately, you will not be subject to any penalties if there are any errors or omissions discovered. Now, there is no relief provided for failure to timely file or failure to file at all. So if you choose to just file late or you say, hey, I'm not going to file at all, you are not relieved from penalties this year, and those reporting penalties will apply to you. Now, keep in mind that reporting penalties are separate from the penalties that can be imposed under the employer mandate. So these reporting penalties are purely for the reporting procedural piece of this. The employer mandate, also known as the employer shared responsibility provisions, can impose their own penalties if there's a failure to comply with those provisions. So those are two separate penalties that we're talking about. Okay, let's talk about some strategies for completing the reporting. And there are really two main ways to tackle this reporting requirement. And the first is to outsource reporting to a third party or to a vendor. A lot of employers are doing this, especially the very large employers that are looking at, hundreds of forms 1095-C that they have to fill out, and that's a really great option. But there are several things to keep in mind when you outsource this requirement to a vendor. So first of all, when you're looking at vendors and when you're making your selections, there are several considerations that you want to be aware of. And the first is you need to evaluate your need for a robust system versus a standalone reporting function. And so a robust system is going to be a system with all the bells and whistles, with all the ACA compliance components. So perhaps it allows you to enroll your employees, and perhaps it will track the eligibility of your employees and send you alerts when employees are eligible or become ineligible. It might calculate affordability for you, as well as completing the reporting. And then the other option on the other end of the spectrum is a standalone reporting solution, and that is kind of the bare minimum, no frills added. It's just completing the reporting for you. So that means filling out the forms, populating the forms, and filing them with the IRS, and perhaps distributing those forms to your employees. So a robust system is more of a long-term solution, more something you might want to think long-term about, whereas the reporting function as a standalone service is perhaps something you might just want to turn to when you really need something quick. When you look at these systems, think about and ask whether or not the systems integrate with your existing payroll or benefits administration system. So if you're getting a system to do this reporting for you, does it interact with existing systems that you have? Will it pull the data from those systems for you, or are you going to be required to supply some data? And then that leads us to the next consideration, which is what is the level of manual data collection and what is the system implementation process that will be required? So if it's going to be a really lengthy and arduous implementation process, you'll want to know that up front. And you'll also want to know how much of the data collection you'll be responsible for. So will you need to fill out a really lengthy template to supply that data, or will the vendor be able to extract that data for you? Also, to look for are hidden fees or gaps in service. And there are two, I think, gaps in services provided that I've seen somewhat frequently when looking at and working with these vendors. And the first is electronic filing. So many vendors will electronically file on your behalf with the IRS, but they will charge an additional fee to do that. And that sometimes is additional. It's not really built into the base charge or the base fee, so you'll want to ask about that. And then the other thing is the distribution of the employee statements on Form 1095-B or C. Will the vendor actually be distributing those statements directly to your employees, or will you be responsible for the distribution of those statements? Sometimes they do offer to do the distribution for you, but again, it is at the cost of an additional fee. You'll want to be sure you recognize and are aware of the duration of the contractual commitment that you're agreeing to. So when you sign up with this vendor, are you signing up just for the 2015 reporting, or are you actually on the hook for a long-term, 3-year plus commitment? And think about what that means. If you're unsatisfied or you're not happy with what you get this year, will you be able to shop for a new vendor next year, or will you be on the hook and committed to the vendor you selected this year? You'll want to evaluate the security and the storage of the data. So first off, you're giving this vendor a lot of sensitive employee data. You want to make sure that that data is stored securely and is not vulnerable to unauthorized disclosures. And you'll also want to inquire about the storage of the data. So for how long will this vendor actually hold on to and house your data, and will you have access to that in the future? And finally, deadlines for signing up for service. This perhaps is the most urgent consideration that you have. So we're already into the month of November. There are many vendors out there who have already said no more. They've kind of closed the door and they have stopped taking on new clients to do this reporting service for them. So there are others out there who are still taking on new clients, but I would be pretty surprised if there are too many vendors who continue taking clients in the month of December. So if you don't have a vendor yet in place for reporting, but you think that's what you want to do, then you need to be looking for a vendor and making that selection as soon as possible. That's absolutely a vital consideration for you to really pay attention to now. Of course, once you get that vendor in place, and if you already have a vendor in place, be sure that you're exercising consistent oversight and auditing measures. You don't want to just, kind of set it up and then walk away. You want to stay in communication with that vendor. You want to make sure that they have all the data that they need, and you also want to be able to do some level of auditing there. You don't want to just blindly sign the forms when they're handed to you at the end of the year for filing. You want to actually go through and kind of eyeball them and make sure that everything lines up and looks okay to you. The alternative, of course, to contracting with a third party is to complete the filing process in-house. And in-house reporting can really be a very reasonable and very viable solution for small employers. So if you're a small employer with one of the self-funded medical plans, in-house reporting will probably be a breeze for you. It can also be a viable solution for some larger employers too. Perhaps you're not too large and so you think you can take this on, or maybe the benefit plans that you have and you have a really stable workforce, so there's not a lot of turnover and you feel like you can take it on, then that's great. And it can be a really great alternative to contracting and paying a third party to do this service for you. If you are going to be doing reporting in-house, your first priority is to ensure the accurate completion of Form 1095B or C. So, you're looking at all of those forms, 1095B or C. We know that those forms have the earlier deadline attached to them, that January 31st deadline, and they will also be the most time-consuming. So you really want to prioritize and tackle those forms 1095C or B. For the 1095C, you'll need to be able to identify your full-time employees per month. You'll need to be able to indicate what type of medical coverage was or wasn't offered to the employee each month, and their enrollment status each month. You will also need to review the code series required for lines 14 and 16. So those codes can be found in the IRS instructions, and for line 14, you'll be using codes 1A through 1I, and for line 16, you will be selecting from codes 2A through 2I. So you'll want to be able to review those and select the handful that you'll be using to complete your reporting. For Form 1095B, again, we know that B form is a little bit simpler than the C form. So for small employers, you will simply need to be able to identify your participants each month. So you'll need to know who was participating in your medical plan for every month of the year. Form 1094, that's the form that's containing the summary data, and that should be completed last. So I actually think that you need to be able to complete these forms 1095, by the end of the year or very shortly thereafter, and then this 1094 form can be completed even after that. So it would probably be reasonable to complete the 1094 form in January of 2016, simply because it's so simple and the deadline is a little bit later than the 1095s. So definitely prioritize your 1095s. Do consider e-filing to take advantage of that later IRS filing deadline. And now we know that we do have extensions available. So if you think you might really need one of those extensions, one of those 30-day extensions, don't be shy. Go ahead and request one of the IRS, but don't rely on that. So you still want to try to get things done as quickly as possible, but do know that you have that automatic 30-day extension out there. The most important thing really is just that you begin collecting and auditing this data immediately. So at Filice, We do offer a workbook to aid in the manual data collection. It really just helps to organize the process and get the data into the correct codes for those lines 14 and 16. But regardless of your method, you must begin the process now if you haven't already. So start collecting that monthly data and start organizing that information. Okay, so as I mentioned at the start of the webinar, hopefully you all had the chance to submit some questions at the time of registration, and I tried to answer and cover as many of those in the material, but there were some that remain outstanding, and I do want to take the time to get to those. I think we do have some questions that have also been submitted during the webinar, and I want to get to those, or as many of those as possible. So we do have about 20 minutes left, which is great because I really want to be able to get to all of these. So I'm just going to start going down the list and taking questions. So if you haven't submitted a question that you have, go ahead and submit that using the Q&A feature there at the bottom of the screen. So the first question submitted that remains outstanding is there an IRS form that can be submitted monthly rather than annually? Unfortunately, the answer to that is no. These IRS forms must be submitted annually. Now, you can use a monthly process for yourself if you're doing the reporting in-house, and you can track the data monthly and kind of fill out the forms on monthly increments, but you will not actually submit them monthly. You'll only be submitting them annually to the IRS and to your employees. What are the definitions of the codes used? So we talked about that. You're going to be using a specific set of codes for lines 14 and 16 on that Form 1095C, and those codes, as well as their definitions, are contained in the instruction. So I can't actually go through every single definition of the codes, but I will just rattle off a few that I've seen employers use most frequently. So for the 2 series codes that you'll be using on line 16, code 2A represents that the employee was not employed during the month. So if they weren't your employee that month, you're probably going to be using code 2A on line 16. And that means perhaps that they terminated their employment during the middle of the year, or maybe you didn't hire them until the middle of the year. So you'll be using codes 2A at some point during the reporting year. Code 2C, as in CAT 2C, indicates that the employee enrolled in coverage offered. So that's one that hopefully a lot of you will be using very frequently. So you'll use code 2C for any month where the employee was actually enrolled and participating in your medical plan. So those are some of the 2 codes. The 1 series codes you'll use for line 14, and those you will have to select those based on the type of medical coverage that you offer. Code 1H we talked about, that one represents no offer of coverage. So for any month of the year where you did not make medical coverage available to the employee for any reason, you will use code 1H. And then the remaining codes are simply different variations of types of medical coverage that you make available. So you'll just have to select the code that best represents the medical coverage that you offer to your full-time employees. What if our plan was self-funded for only part of the year? Okay, so if you're a large employer and you had a self-funded plan for a portion of the year, that means you will be completing Part 3 on that Form 1095C for part of the year. So you won't be reflecting the full year on that Part 3, but you will be up until you lost that self-funded plan. If you're a small employer and you had a self-funded plan for part of the year, that means you are subject to the reporting requirements and you will be completing Form 1095B, again, only for those months where you actually maintained a self-funded plan. How are erroneous forms corrected? So if you have to make a correction, if you filed something erroneously, you simply file a corrected form with the IRS, and you actually file the exact same form, but you check the box at the top that says corrected. So you'll check that box and you'll file that with the IRS. It's a pretty simple process, thankfully. What information must be reported on Form W-2? We talked about that briefly at the beginning of our discussion, and that is the aggregate cost or aggregate value of the medical coverage that you provided to the employee for the year. So this will actually be the cost of the employee and employer contributions of what the employee actually enrolled in and what they actually received. So you'll probably have a lot of varying amounts reported on your employees' forms W-2. So there's probably not going to be a ton of consistency. Everyone's going to have something a little bit different. So it's the actual cost. And again, only employers that filed 250 or more forms W-2 are currently subject to this requirement. What are Forms 1094 and 1095A? So 1094 and 1095A, these forms are actually filed by and provided by the exchanges, the state exchanges, such as Covered California. So the exchanges are subject to reporting requirements, and they file the A series forms with the IRS. So if you or you have an employee who had coverage through an exchange like Covered California for any part of the 2015 year, you or they will be receiving a Form 1095A to indicate the months that you were receiving that coverage. So if you haven't already kind of caught on to this, there are three different series of forms, the A, the B, and the C. So the A is for the exchanges, the B forms are for those small employers with a self-funded medical plan, as well as insurance carriers, and the C forms are for large employers. So lots of different variations of the forms. What are the individual reporting requirements? The individual reporting requirements have been in place for a few years now. We've all been subject to them when we file our income taxes, so it's going to continue that way as well. So when an individual goes to file their income tax, they simply certify that they did or did not have medical coverage for the year. And now, going forward, individuals will have these forms, these statements that are provided by the carrier, by the employer, or by the exchange to actually verify and substantiate what month the individual had coverage. So now there will actually be some sort of proof to that certification, as opposed to in the past it was just making that certification on your good faith. There was a question submitted about aggregated employers or aggregated large employers and the rules surrounding that. So an aggregated large employer is really a group of employers that comprise a controlled group. So they're employer entities that are under some sort of common control or common ownership. And these entities are actually aggregated, and they're kind of considered one single large employer for purposes of reporting and compliance with the mandate. Now, typically, that common ownership level has to be at least 80%. So you want to have an 80% common ownership among all of the entities for them to be considered a controlled group. But the controlled group concept is actually not unique to the Affordable Care Act. It is long-standing in the Internal Revenue Code. So if you have questions about whether or not you are perhaps part of an aggregated group, do ask your tax professional or accountant that question. They should know the answer to that because, again, it's long-standing in the Internal Revenue Code, and it does have implications beyond just the Affordable Care Act and reporting. So if you think that might be you, do verify that with a tax professional or your accountant. All right, I want to turn to some questions that have been submitted just this morning. And if I didn't get to one of the questions that you submitted during the registration, please don't let that go. Don't leave it unanswered. Either submit it now or email me later on, and we can get to that. So I want to make sure that everyone has their questions answered. Okay, so first question, what if the employee was termed after 3 months? So if you had a full-time employee who was terminated after 3 months, you will probably still be reporting on that employee because they were employed with you, presumably long enough to become eligible for medical coverage. So you do want to report on them. And this is true of really any employee that terminated in the in the year of 2015. So if you had a full-time employee and their employment terminated at some point during the year, unless it was a really, really quick and really short employment period, you're probably going to need to be reporting on that employee. Next question, if we are self-insured for the 1095-C, will we be inputting the premiums we are charging our employees or placing the COBRA rate? If you're filling out the form 1095-C, so you're a large employer and you have a self-funded medical plan, you will be entering the employee cost of coverage on line 15. So you'll be putting in the lowest cost of coverage that you offered. And then below on Part 3, you will not be indicating anything about premium. So you'll be completing line 15, but on Part 3, there's no information that you need to relay about the premiums that you charge for someone like a spouse, a dependent, or anything like that. Let's see. What about line 15 for the multi-employer plans? Is an amount required? So you do presumably need to put in the cost of that coverage. So you would want to inquire with with the union-sponsored plan or with the trustee of that plan to see if you can't get some sort of answer. I do not believe that the instructions, at least to my reading of them, it didn't exclude having to fill out line 15. So currently I'm under the presumption that you do still need to enter an amount, and that's an amount that would have to come from the union-sponsored plan. Otherwise, you really don't need any additional information from the trustee of that union-sponsored plan. Let's see. Form 1095-C, coverage for individuals when coverage is declined. So if you have an employer, a full-time employee, and you offer coverage to that employee, but they decline or they waive that coverage, you're still reporting on them, so you will still indicate on line 14 that an offer of coverage was made and what type of coverage was offered. You will still indicate on line 15 the cost of that coverage. But if they waived coverage, there is no specific code on line 16 that directly correlates with a waiver or with a voluntary waiver of coverage. You'll have to see if there's any other code that might fit. For example, perhaps one of the affordability codes would fit, so maybe a 2H could perhaps fit if you offered coverage that was affordable. If none of those codes fit for you, then you will end up with a blank month. And so on line 16, you might end up seeing some blank spots there. And that doesn't automatically mean, oh no, I'm going to be penalized for failure to comply with the mandate. It just means perhaps it might signal to the IRS to look a little bit further, but it's not necessarily in and of itself a bad thing to have a blank spot on line 2A, or I'm sorry, on line 16. But you do want to see if any of those code series 2 will fit, and if they do, you'll want to be able to use that. But there is no specific code for waiver. This question states, we offer all full-time employees a fully insured medical plan, and we pay 100% of the premium, so there is zero cost to the employee. Would we use code 1A or 1E on line 14 of Form 1095-C? Okay, so I cannot actually tell you which code that you will use, because as I hope you saw the disclaimer at the beginning of the presentation, and there will definitely be another disclaimer at the end, I cannot actually tell you which code you will specifically be using. However, code 1A or 1E would both fit, presumably, this scenario. 1A is a qualifying offer of coverage, which means it was affordable to the employee. And Code 1E does not actually talk about affordability. It just says that that you, the employer, offered a minimum value coverage to the employee, and you also offered coverage to a spouse and dependent. So presumably either one would fit. If you pay 100% of the premium, that is undeniably affordable to the employee. So I think you could make a good case for either 1A or 1E, but I cannot actually tell you definitively which code you will be using. Hopefully that helps to make the decision for you if you look at the definition of Code 1A a little bit more closely. This question, if an active employee is offered COBRA early in the year, do you show an offer of coverage for all remaining months of the year? The answer to that is yes, assuming that offer of COBRA coverage remains. So if you have a full-time employee and they transition to a part-time job, let's say in the month of March, presumably that offer of COBRA coverage remains for the full year. So you would continue to indicate an offer of coverage for the rest of the year. And again, that's regardless of whether or not the employee or the employee actually elected to enroll in the COBRA coverage. So that is irrelevant. You will still need to reflect an offer of coverage being made for those months where the COBRA coverage is made available. Next question asks, are we using 2014 numbers to determine if we are a small employer or a large employer? The answer to that question is yes, absolutely. So for every year, you will be looking at the previous year's employment numbers to determine your size in the current year. So for 2015, we ask, hey, are we a large or are we a small employer in 2015? You will look at 2014's employment numbers. That also means that going into 2016, you will be looking at the current year's employment numbers to determine whether or not you are a large or a small employer for 2016. And it will go on like that. So for every year, you look at the previous year's employment numbers to determine your size. And if you think about it, that's really the only way that it makes sense, because the IRS certainly doesn't want employers in the middle of a year to say, oh my gosh, I think we might be a large employer now, and then have to suddenly scramble to start complying. You want to be able to know in advance of the year what your obligations actually will be. If you are a fully insured large employer, doesn't the insurance carrier submit certain forms on our behalf? Absolutely. If you're a fully insured large employer, remember, you are not completing Part 3 on Form 1095-C. And the reason you're not completing Part 3 on Form 1095-C is that insurance carriers will be submitting that information to the IRS, and they will actually be doing that using the same form that small self-insured employers are using. And so the carriers will be telling the IRS what month each individual was actually enrolled under that plan, and the carrier will also be providing your employees with a statement, a 1095-B statement, to indicate to them what month they and perhaps their dependents or spouse were enrolled under the plan. So carriers are providing certain forms on your behalf, but they by no means relieve you of your reporting requirements. You're still obligated to report on Forms 1095 and 1094-C. Can you address reporting alternatives, and can software to prepare and file forms if we do this in-house? If you do this in-house, presumably you're not utilizing any software. You don't have any third party assisting you. There of course is the way to do it, which would be using hard copies and actually filing those hard copies with the IRS. And there are, I believe I've heard of some software solutions that will auto-populate the forms for you, so that would save you some time. But if you're doing reporting in-house, there's really no getting around the fact that you'll have to collect all that data. You'll have to select the appropriate code, and you'll have to actually get it on the forms one way or another, whether or not you file electronically. For union health contributions, do we report the month we made a payment or report what month the health coverage payment was covering? So I'm not sure I entirely understand the nuance of that question, but if you have union employees and you are contributing to a union-sponsored plan, for the month, you use that code 2E for the month where you made that contribution to the union-sponsored plan. So if the month of November you have your union employee working and you contribute in the month of November to that union-sponsored plan, then the month of November you will use code 2E. So I believe in terms of this question, it is about what the month in which that payment was made, not about the month in which the health coverage was being covered by that payment, if that makes sense. If employees declined insurance benefits, do we still need to provide them with a 1095-C? The answer to that is yes. You will be filling out a Form 1095-C for every single full-time employee that you had during the year, regardless of whether or not they declined or chose to participate in that medical coverage. So again, you're going to be filling out a Form 1095-C for every full-time employee that you had during the year, and you will be providing that employee with a statement, so a copy of that Form 1095-C. Okay, it looks like we're now into the 11 o'clock hour, so we've just missed our ending time. There are a lot of questions that remain unanswered here that I didn't have a chance to get to. So my hope is that I will be able to get to all of these questions today and in the next couple of days. So please, if you didn't get your question answered, hold tight. I will try to get to that question. If you need to submit a question later on, please do so by emailing me. So my email address is here, deborah@filice.com. And I just want to make it really clear once again, I cannot actually give you advice on what you will be entering on these forms. I can only answer your general questions and hopefully give you enough information for you to make an informed and educated decision as to what you will be putting on those forms, but I cannot actually tell you what to do. So I hope that this session has been helpful and has been informative. I really hope that it answered your questions. I know there are several outstanding, so I know there's a lot of you with questions still lingering. I will get to those in the coming days as best as I can. So hopefully between this presentation and the answers that you receive from me in the next few days, you will feel as if you have gained a little bit more clarity on this rather complex and complicated topic of ACA reporting. So thank you all for joining me this morning, and best of luck to all of you with the reporting requirements.